Welcome back to the 301 Club, coming at you live from Montgomery Village in Maryland.
Yes, sir. Welcome back, guys.
We got some good information for you today if you want to join our journey into financial freedom.
Yes, drop a like or a comment.
Yeah, like and subscribe so that you can possibly even rent out our new place because it looks like we'll be closing on another property.
Yeah, for sure. I know we spoke about Bank of America last episode. We spoke about it a little bit, but yeah, it ended up taking advantage of the opportunity. Ended up putting an offer in for a place around the corner from where we currently stay. It's in the neighborhood and whatnot. But yeah, it's interesting. They offered a assistance for closing costs and down payment, and so I only put up so much. Wasn't very much. They helped out a lot. If you like details on that, hit us up on the DMs on Instagram. We can get into that. But they had opportunities there available, and the place around the corner was listed for sale recently, and it was going to get listed to market very soon. It was on Zillow for coming very soon. So took advantage of that, saw that, figured I'd try to qualify. I qualified. So that was an opportunity. I figured, why not make an offer on it, see if I can get in there, get it for a good deal. Ended up working pretty well with the loan officer. Process was pretty smooth.
What were the requirements for getting the loan? Because it was a loan that Bank of America offers specifically. I think it was backed by a conventional loan, but it was a specific loan. Do you remember what the requirements were in order to get the loan?
To get the loan, of course. I mean, they ran my credit. They did all the average steps you can think of. Employment history, credit history, your checking or your bank history, bank statements, and all that. But there weren't really that many requirements. It's not like a first-time home buyer type. There wasn't nothing of that sort, which is good. So if anybody out there already has property, they can still take advantage of this opportunity from Bank of America. So
you were able to remain on a title on another property and then also take advantage of the program.
Yep. Yeah, exactly. So that's I know my name was on this title for just kind of how we ended up doing things. And then so I told the loan officer that. He said it's not a problem. He said most people do that. Sometimes parents have children that they put on their title. And that doesn't disqualify the person from getting a loan, or maybe even qualifying for first-time home buyer stuff, because they technically haven't gotten a loan out on their name. So that's what I did. I didn't have a loan out on my name, so I ended up qualifying for this loan. To make an offer. Original offer we made was $310. And it was listed for $300. So that was interesting, but our real estate agent's really good at his job, and he talked to the seller's agent, and he figured out that our offer was on the bottom end, and they had about 6 offers, I believe. So that was something that we kind of had to come back to the drawing board. I had to do some thinking and figure out if it was worth offering more money. Ended up bumping it up from 310 to 325,000 is what the offer we made.
Yeah, for a 1,200 square foot place, right?
3 floor, 3 bedrooms, 2.5 bath, laundry, washer and dryer, fully loaded kitchen. So I mean, it was a great place. The place that's here is similar, but it went for less. But so it kind of showed us that there was something going on here. It was worth putting a little more money down. So made that offer of 325. And funny enough, the loan officer actually had, I think, done a previous deal with the seller's agent, and so they had a relationship there, or they knew of each other. So that kind of maybe helped a little bit. But we ended up making that higher offer, 325. The seller took it, and we moved forward from there. And unfortunately, I don't know if you wanted to throw something in there, but
no, I just wanted to throw out there. It's to our followers that it's looking like the market has been going up, because I'll throw up the comparables on the screen, and then you can see here that, like John mentioned, our place we got here was about $289 when we bought it, but they got comparables going for $310, $311, $321. So as you can see, things are already going up from not even a year from ago. Like we bought in about July of 2022, and now it's only May of 2023, and they're just talking about. It just shows you like either there's a bubble going on, or maybe this area is just attracting a lot of wealthy people who are raising prices of things, and the market's hot. It looks like.
Yeah, it definitely seems that way. And we found out like with hard physical proof, which is an appraisal that was done, because when you get a loan from a bank, a mortgage, they always do an appraisal, and the appraisal, they value the property, and the property is very similar to this property here. And back then when this place was purchased, the value of this property was appraised at 300,000, and the place that was over there appraised for, the one that we made an offer on, appraised for 318. So that was interesting.
So it appraised under what we offered. So that was a tricky situation, and that we tried to do our best to get around that. And I think our agent was really helpful in completing that task for us, because he mentioned to us that it's kind of more so the seller's responsibility to have the higher value of the home. I was thinking that if we were to walk away from the deal because the bank wouldn't fund all of the money of the 325 and it was only worth 318, then we could have easily have told somebody that the house is not worth the prices that people are offering. But anyways, our agent was able to secure that deal, and he dealt with it he used his superpowers.
Yeah, no, he was good. He was good at his job. I like that. He was like saying how he kind of talked to the seller's agent, kind of got a feel for what the seller was like kind of feeling in that moment. And I believe they were saying like, yeah, like, think you can come up from 318 a little bit, maybe like 2,000. And we hadn't told them, but I had an extra 2,000 in my pocket. And then when I spoke to our agent, or Aziz, he said that like they said that you might have to come up. If you could come up like a little bit, they don't want to take it at 318. And I was like, yeah, let's do the 2,000, and so he went for it, and they accepted at 320. So we paid less than the original offer, which was 325. But yeah, it worked out pretty well, I'd say. I mean it's a risk we're taking, but I believe that the value of the house will only go up from here, and we've already spoke about it in previous episodes. You guys should watch it. I know we did a series on We Bought a House back then, and you guys can look that up. And I know we talked about the reason is that like the the mall, I guess they're turning into
like a live, work, play area, overlooking a lake. So it's going to attract probably more wealthy people, and maybe get some people out of the area that
it's just going to increase
really
the value
stay here anymore, which is a good and a bad thing depending on what perspective you're coming at it from. But if you're trying to build wealth and become a wealthy individual, you're going to like that kind of situation where prices are rising. It sounds like the economy is working in the favor of entrepreneurs right now. The only problem is with interest rates, but there's a lot of strategic ways to get a lower interest rate, and unfortunately we didn't come away with this deal with a really good interest rate because of the market conditions right now. But there's different ways. Like you could even get if you have a 501(c) or a charity, then you're allowed to get loans for like 1 or 2%, even at all times of economic cycle. You could get that loan right now. We got a rate for about 7%, but you could get a same charity loan right now for only 1% or 2%. Nonprofit. That's it.
That kind of goes into what we learned this from a tabling event, sort of. It was for, I know if you want to get into it, but it was like a flea market that we went to earlier today, and we also went to a tabling event for mental awareness or mental health awareness. We went. It was a walk. It was basically a county sponsored event, and we just went there to network and try to meet some people so we can maybe have a table and voice our opinion on the fact that financial wellness is a part of mental health, and being able to not worry about paying bills or your future or being able to afford to live anywhere. Because I believe that in the Montgomery County area, shout out 20851, like maybe Rockville area, it's becoming like very hard to even own a home because the median price is about $500,000. Yeah.
And so to have the correct DTI and a good credit score, it's going to be even harder. And considering the fact that right now, I think they're charging people, if you get an FHA loan, they're going to charge you if you have a high credit score. Like if you're doing good in your credit, they're going to charge you a fee actually. So I think they're really just trying to get younger people in who have lower credit to buy a home because it's a lot harder. And I think especially in this area, shout out 20886, it's not as hard right now, but it's going to be, the prices are going to be going up because this appraisal that we got for our home, we'll pop it up on the screen, and they're trying to say that there was a 3% increase in prices around here from 1 month ago. But with our house, we had a 5.5% increase. So you can see that the market may be flaming a little bit more than what they're showing in the papers. So definitely shout out to this area.
Just depends on where you're at. And I think that's kind of what I was trying to say earlier was it's a risk we're taking. And I know we spoke about it before, but it's because we believe that this area, there's like this bubble that's being created and that there is development that's happening. And we spoke on it, in the previous episodes. But yeah, like we have that this construction, they're going to build, they're going to renovate that whole area, make restaurants. And then there's like a science area, like a lab area that they're building.
They got a Chick-fil-A and the sheets already done now.
Yeah, they're working on that. Yeah. So it's just kind of like looking for the right area to invest in. If that's something that our viewers are trying to do, you do your homework. It's worth the risk. I mean, we're taking a risk, but I think it's worth it.
Yeah, and like there's also the problem of once we start getting into all more properties that we've been buying is how are we going to fund these properties, because our DTIs are tied up at this point. But we watched a webinar actually through Traction Real Estate Investors Association, so check them out. They got monthly meetings to educate you for free. And right now, this week we saw Alan Cowgill. He says it was called How to Easily Attract Private Money, and basically what this guy does is that he just creates a community, and he tries to attract lenders by doing that. And the point is just to get them to say yes. For example, you should move your money from a certificate deposit, which is making less than 1% of interest rate, and maybe I can buy a house with that and then rent it out. I can either give you cash and dividends, or we can do it another way that you would like.
Loan, interest
and that's
rate.
how you're going to get to the closing table on your end. And once you own a property, it's going to be so much harder to have that property taken away, and at the end of the day you get
you could always sell it back as well.
Yeah, because once it's in your name, then but you're using the funds of somebody else, so you're gonna have to have a contract on the side with them, but the property will be in your name at the end of the day. So yeah,
and then the house would have a lien on it against you, but it would be for that loan that they're giving you from a private lender. And I think it's a great option. I think we've talked about it before this podcast today, and it's definitely something that we're going to look into. And we actually have properties that we wish we could get that are also being sold in this neighborhood that we currently are just not able to do right now because we just overextended ourselves right now buying this, or I'm getting the second property. And so it's just something that if we have viewers that are interested in investing, they don't want to do their homework, they can hit us up. We can work something out and make something happen, because there are great deals out there, and it's just a matter of putting that money together or pulling it together from different sources, and private lenders are one of them. And he made a great point. I liked what he was saying in the meeting. You can meet family, maybe their family might be interested. Just different ways to get it, building a community, talking to people, networking. It's something that it's out there, money to like be used for investment purposes, and they're gonna make money back for sure. That's what it sounds like.
Yeah, and there's a lot of advantages and disadvantages of going with the bank, and one of the disadvantages, like, it's a lot of paperwork. I don't know if you had that experience when you're going through it.
Yeah, it is a lot of paperwork, a lot of back and forth.
Is there any other experience that you had that you think maybe going through a bank is maybe a negative experience?
I think it's just a lot of back and forth.
Yeah.
It's just a lot of talking to different people, the underwriter, the loan officer. It's just a lot. But
the advantage of this method from Alan Cowgill is that you make the rules, you buy the property at a discount because cash is king, because the person giving you the money is going to be giving you a bunch of cash, right? Like a few $100,000 is what you'll need in this area.
Yeah.
Shout out 20886. And then you don't need a job. So like to go to the bank, you need to have income to be paying it. But you could do what we're doing, which is we're just going to get use our income from our W-2s to fund this process until we're able to not have to go to a job and we can resign.
Yeah, 100%.
In our 30s.
That's the goal.
And those are some pretty good advantages about that. And then I think the main way we're trying to do it, which we recommend, is we're going to use Eventbrite and try to rent out a building close in our neighborhood, because we want to talking about, you mentioned that we're getting properties in the same neighborhood. Like, I just got to touch on the fact about how priceless that is, because that way you can easily just go to that property if you need to fix something, and you're obviously already going to know people in the community. Like, we had a place down here in our neighborhood, around the corner. It went for sale, and the person who's renting it is a friend of the people who are next to us right now, our
neighbors.
neighbor.
Yeah, they know each other.
So that's just how it works, and there's just so many advantages of buying in the same neighborhood. You know, we're basically playing a monopoly out here. So
yeah,
we can just driving these prices up and taking
unintentionally,
each house one by one. I mean? Yeah, we had no idea. We didn't realize,
because like so many offers, 6 offers. We were you know, competing against the property around the corner that we're trying to buy around the other corner. But yeah, it's just interesting. It's like, seems like the value in this area is going up. So I mean, if anybody out there that's watching that wants to invest, they should definitely hit us up if you don't want to do your own research. But yeah, that's why we're hosting these events. So we're thinking about hosting, trying to gather a community, give back, and like teach these people these things that we know. So that we can kind of give back to the communities, because this knowledge is like things that we're kind of learning as we go, and we're just trying to give everybody that's watching the same sort of opportunity with like the information that we're providing. So look out for those events. You know, you can attend. It might either be a Zoom, or like you were saying, you might rent out a local area, do like maybe some sort of like small event and small gathering, and we'll have a PowerPoint and we'll talk about what we've gone through and kind of, you know, what's available and what you can do. And also, if you don't want to do it on your own, we're there. We can provide our services, and we can work something out.
Yeah, and I think that we actually went to an event today, community event, where we met a bunch of people, and we bought some things at a flea market, and Jhon actually was able to get 60% off on this staff here.
On the low keys, yeah, but I pay full price, quote unquote. Is this piece here is cool. Yeah, it was. I'm bargaining on it, I guess, but it's cool. Yeah, I mean, it's a local artist. Didn't get their name, but we decided to walk around, kind of see what was going on in the community, trying to be a part of it. You know, I think that's always good. Yeah, I had a good time. You know, what are your thoughts? I know you got something for yourself as well.
Yeah, I got something definitely just in time for Mother's Day. You know, my grandmother is a big Elvis fan, so you never know what you find just going to community events, talking to people, getting to know each other. So
yeah, exactly.
On that note, we recommend it, and we hope we see you at one of our Eventbrites in the future. And
for sure.
We will talk with you next time.
All right, guys. Thanks for watching.
Bye.